World's top investors seem to always stay one step ahead of the market. The secret might be simpler than you think. Technical analysis and algorithms. Imagine you're an investor. You're looking at a sea of data, price movements, trading volumes, and market trends. This is where technical analysis comes into play. It's a method used to evaluate securities by analyzing statistics generated by market activity. It's like a lens, helping us see patterns in the chaos. One of the key advantages of technical analysis is pattern recognition. It helps us identify recurring patterns in price movements and volume trends. These patterns, like footprints in the sand, can offer valuable insights into potential future price movements. But how do you make sense of all that data? This is where algorithms step in. They're like a superpowered calculator, processing vast amounts of historical data to identify trends and correlations that the human eye might miss. This is called quantitative analysis, but algorithms are not just number-crunching machines, they also offer the advantage of automation. By automating the trading process, algorithms can react quickly to changing market conditions, removing emotional biases and ensuring disciplined execution. Algorithms also allow us to test trading strategies using historical data. This process, known as backtesting, helps us assess performance and refine our approach over time. But what about risk? Algorithms have us covered there too. They incorporate risk management techniques like stop-loss orders to help us mitigate potential losses and preserve capital. And let's not forget speed. Algorithms process market data in real time, allowing us to capitalize on opportunities faster than ever before. Perhaps the most significant advantage of algorithms is their adaptability. They can adjust trading strategies on the fly, ensuring we stay competitive in dynamic markets. So to summarize, technical analysis and algorithms are powerful tools for investors. They offer improved pattern recognition, quantitative analysis, automation, backtesting capabilities, risk management, speed, and adaptability. But remember, while algorithms can enhance decision-making, it's essential to combine them with fundamental analysis and exercise caution. There you have it, the world of investing decoded. Until next time, keep exploring, keep learning, and keep investing.